what happened to China and what will be the outcome for the coming years. In China, as you know, the Chinese economy has two big engines. The first engine is the fixed asset investment, clearly construction of highway, trains, airports, housing, and so on. This is quite crazy during the last 10 years under the president of Hu Jintao and the Prime Minister Wen Jiabao. Unfortunately, this engine will disappear, which is huge impact, of course, on Chinese economy in terms of balance of growth and in terms of size of growth. And you can see it easily because, for example, in 2009, during the great financial crisis, the Chinese government has invested like crazy in infrastructure, and this infrastructure contributes more than 50% of the Chinese GDP growth. But unfortunately, for the coming years, it will disappear. And of course, it will have very important impact on the Chinese economic growth. I mentioned about infrastructure will disappear. Properties market also will have very negative impact. You know that properties is one of the main focus on China, and also it's one of the biggest concern for the Chinese government because we are in a situation of bubble, and of course in terms of bubble, in terms of high property price, it also drive a very it also has a very important factor on the consumer confidence through the wealth effect. Of course, if the properties market is stabilizing or moving down, it also will have a depressing effect on the consumer confidence. So what happened for the Chinese properties market? You see that in 2009, thanks to the impulse of the Chinese government, you have an extraordinary rise in the properties investment. Extraordinary of more than 25% in year-on-year growth in terms of square meter built. Just make a calculation. Here you have the number of square meter. That means for last year, China has built more than 50 million apartments. China has built more than 50 million apartments of around 100 square meters. It's a huge. And of course, it has a huge impact on the Chinese economy. Just to give you an anecdote, I used to go to China at least once every 2 months. In 2009, end of 2009, I visited a city which is called Chongqing. Now it's 2 years ago it was not famous, but now it's famous because of the member, Mr. Otsilai, who has been sacked. When I visited this city of it's 35 million people. 35, it's not nothing. So I visited a property developer. This guy showed me, oh, Mr. Ngo, we are building a nice project. You know, you have this project, we have 70 towers of 45 to 50 floors per tower. And then I make a big calculation. I said, wow, it's enough to house 100,000 people. 100,000 people for this project. So yes, and we are building 9 other projects in the same city. So it's so just to show you how it is crazy at this period. The whole city of Chongqing, and the same for Chengdu and any other city, are just a big construction field. Of course, you cannot continue forever because you cannot spend your life building an apartment. That's why sooner or later it needs to fall. You need to consolidate. I think it's normal. Of course, you have negative effect. but it is unfortunately not. Also, something very dramatic for the Chinese properties is today the inventory represents almost 20 months of supply. So that means you have lots of inventory, and of course, if you have lots of inventory, it just puts pressure on the activity. So I talked about infrastructure, about properties. What about credit? Also, it's also a very big issue in China, credit. You know that this big investment in infrastructure and properties have been done through huge credit. This is the chart of the ratio of credit divided by GDP growth. You see that we have a big spike compared to the trend. China is overflowed by liquidity and credit, and sooner or later, to be fair, it must come down or stabilize at the current level. That means in China, for the coming years, credit growth will be relatively moderate. So, and another factor also that shows that China should slow down compared to the previous years is the labor market. We used to say that the Chinese labor market is relatively cheap. Chinese labor market is relatively cheap. In fact, it is not the case. Chinese labor market is getting more and more expensive. And it's more and more difficult to find people willing to work in a factory. Here, you have this ratio. It's quite interesting. It's the ratio of number of job offer by companies divided by number of people willing to take the job. You know that you have more offer than people wanted to take. And it's not only for the eastern area, I mean coastal region, but also for the internal provinces. In China, you have pressure. It's difficult to find jobs. If you look at the survey of the Chinese corporate, you ask them, what is the biggest concern in China? It's not sales, because they still expect an increase in orders. It's not demand, it's talent. Because for them, it's impossible to find a job. It's possible to find people, employees. Or just take also example, I went to a very remote area in China. It was 3 months ago. And then I asked this, how much the employee are paid in the normal plant, just doing very basic stuff. And I was told that the people are paid 3,500 RMB per month, 3,500 RMB per month, including accommodation, food, and so on and so forth. Then again, I checked renminbi. That means divided by US dollar, it's something like 4 to 500 US dollar. What you say, well, it's nothing. Nothing compared to the cost in Moscow, for example. But it's almost higher than the basic salary in Hong Kong. This is crazy. In the countryside in China, the salary is sometimes higher than the basic salary in Hong Kong. And the Hong Kong, of course, is much more expensive. So you mean that you have also a big pressure? That means China cannot afford to build a factory to sell cheap stuff. They need to move upscale. And then, as a consequence of all these remarks I've made, going forward, Chinese GDP needs to be much weaker. In the past 20, 30 years, Chinese GDP used to expand by more than 10% in real terms. Probably in the next 5 years, it will move not 7.5%, this is the target of the Chinese government, but probably by 8 or 8.5%. Why I say not 7.5? Because the Chinese government target is always below, at least for the past 30 years, always below the forecast. So anyway, the Chinese GDP growth need to slow down and more balanced. So for the coming 5 years, expect Chinese GDP growth to slow down around 7 to 8. And of course, it has a huge impact for countries like commodities, countries like Brazil, Australia, or Russia. Because as you can see on this chart, Chinese consume a lot of global commodities. I think that Chinese represent 65% of iron ore. 65% of global demand of iron ore. That what we use iron ore is just to build roads, highway, buildings, and so on. So it's a huge. Also in terms of coal, imports 14%. Why it's low? Because China has also lots of coal, but still, and also oil. Chinese imports around 11% of oil, and of course, as the Chinese is slow down, it has most import is iron ore. Iron ore. That's no surprise that countries like Brazil, if you look at the stock market of Brazil, it has almost 99% correlation with Chinese stock market. Because one of the main exports of these commodities are iron ore. But to be honest, I'm not that worried because all what I mentioned, I already I'm fully aware in the past few months, and on the contrary, it is more positive stance because it shows that China cannot only focus on fixed asset investment, but China needs to be more balanced and exactly what's going on, and also because China has lots of possibility in order to fine-tune or to boost the economy. So for me, it's not really a big concern. Why? First, if you look at the PMI index in China, so this is, I've done this chart in end of March. Chinese PMI index, which is the confidence of the Chinese corporate, is latest figure is 53. That means it is in expansion mode, very positive. Even more positive is the PMI for services. I mean the confidence level within the services companies. It's above 58%. That means they are very confident that consumption will continue to expand for the services. So very positive. It is not in construction, on the contrary, it is on the expansion. And also very important is inflation. Chinese inflation is coming back nicely, and the trend is down. And of course, if you have less pressure in inflation, then the government has more possibility to act on the monetary policy. It's exactly what the government is doing. This is the Chinese PMI index, and this is the Chinese reserve ratio requirement. You know that, in fact, the Chinese government mainly focus on banking system. That means mainly focus on the reserve ratio requirement in order to boost the economy. And you see that because of weaker economic growth, the Chinese government can lower the reserve requirement. That means put more liquidity on the market, on the economy, and then to boost it. So you see this reserve ratio requirement move from 13 or 14% to almost 20. So you have lots of potential for this to go down and to boost the economy if it slows too much. Another factor is very positive in China is contrary to Europe. The Chinese government is very rich. Chinese government is very rich. This is the fiscal situation of the Chinese government. Why it is very rich? I mentioned before in terms of forex reserve, but also it's rich because in fact the Chinese government owns lots of companies. Many of Chinese big companies are state-owned enterprise. And also the Chinese government has lots of possibility to increase taxes or to more focus on different sectors. And then finally, as a conclusion in terms of growth, we at BNP Paribas Investment Bank and BNP Paribas Group, we forecast that the Chinese GDP growth for the coming year should expand by more than 8.3%, higher than the 77.5% forecasted by the Chinese government, which is, maybe it's low compared to the 14% exceptional level we had in the past, but still 8% is quite high in absolute terms. And also, we also are very positive for the rest of Asia because we believe, based on what I mentioned at the very beginning, the leading economic indicators, the survey and industrial production export should move on the uptrend. That means that the economic growth should be very strong.